Kjellén. I'm CEO of the mobile banking service TIC, one of two founders. And TIC is a two-unit business, basically, where we provide consumer banking services direct to consumers in Sweden through an app. And we're also a B2B business where we provide technology services to banks like Nordea or ABN AMRO or Klarna throughout Europe. And today, obviously, here to talk about the Swedish consumer business. Just a short background, TIC is with 500,000 users in Sweden. We do everything in-house. I think we're a product and engineering company at heart. Looking forward to take you through that journey. So, first, the state of this mobile banking market, or the consumer banking market, how I see it, or have seen it over the past maybe 5 or 10 years in Sweden, but also elsewhere. It's been a market where switching cost has been extremely high. We've had very low transparency, and I think we've ended up in a market where we've had an enormous mismatch between products, good products, and the consumers that should consume them. I think there's 3 distinct reasons for why we ended up here. The first one being a monopoly on viewing people's finances. So the only place where you could view your finances, check your balance, etc., would be with the bank that you bank with. Then you kind of get a monopoly on mass market advisory. Because if you want to do mass market advisory, you need to see transaction data, balance data, financial data. And thirdly, banks have had a monopoly on transferring money, transferring fund. And I think that joined together with a distribution model that's been physical and hard to compete with has been like a perfect setup. And I think it's though about to change. Some part of that will change due to legislation, like PSD2, and some will be unlocked because of new technology. So, Financial Times 2013 had the headline, "Banking is heading towards its Spotify moment." I don't know, it's been famous and people are questioning, when is that coming? The Spotify moment being referred to, the moment in time where a complete industry is being blown away and replaced by something new. I don't think we've seen at larger scale the Spotify moment in banking. I think that over the past decade we see internal processes being redefined or made more efficient, like back office or interaction with our customers. But that completely blown away moment we haven't seen. Looking at other industries such as travel, before we had the local travel agencies in each single city, and if you wanted to go to Italy, you went into these travel agencies and said, I want to go to Italy, and they presented 5 hotels in Italy and said, you want to go there? Well, don't you have anything else? No, then you have to go somewhere else. And the most important thing for the hotels was obviously to make sure that my hotels was picked and distributed through those physical travel agencies. And then came Hotels.com and TripAdvisor and everything, blow it away and said you can compare hotels and you can book them online with us. And everything changes, and the entire industry was kind of recalibrated to deliver customer value. Because all of a sudden it doesn't matter anymore for the hotels if they were picked by the travel agencies, but they needed fantastic reviews. It didn't matter if you had, the lowest prices or the best location. If you got rated 2 out of 10 or something afterwards, you'll have absolutely 0 customers the next week or the next year. So I think it's amazing how new technology kind of unlocked the market for the benefit of consumers, obviously, but equally much for the good banks. And it wasn't, a lot of people in banking are asking the questions, is the future only going to be low prices? Looking at most other consumer verticals, you have everything from like the Apple of banks and Gucci of banks to something else. Or in the case of hotels, you had the most expensive ones and super cheap ones. And the only thing that mattered was, can they deliver customer value? So, I think that what we see now with the mega wave of open banking throughout Europe, a lot of people are answering or have the questions, will this be the Spotify moment for banking? And I see maybe now first in the UK, where we have open banking just being implemented. The rest of us, most of us, have to wait for another 1.5 years before the open APIs will be available. But they ask a few questions that I would see the most important being: one, will companies or consumers trust these new services that are emerging, the fintechs and the likes of them? Secondly, will these companies, the fintechs, will they steal the customer interaction from the banks? And thirdly, will banks be turned into dumb pipes and just product providers? And I know that a lot of people are now turning to Sweden because for a few different strange market characteristics that we've been fortunate to have for a few years, that's kind of simulated open banking. And I think that a deep dive into Sweden will give us maybe part of the answers to these, I think, important questions. So, Sweden has had one of the highest mobile banking adoption rates in the world. We've had a national identification system that's built into our phones, which is used by all banks, but also by all authorities in Sweden. It's virtually a cashless society. Myself, I haven't even touched a bill over maybe 1 or 2 years, and it's not me being strange. Anyone below 60 has literally stopped using cash. There's a national peer-to-peer sending money instantly system, commonly owned by the banks. So I think that, and the last thing, maybe the most important thing, services such as Tink reversed engineered the non-public APIs of the banks back in 2013, basically replicating what is now to become Piece 2. So I want to walk you through basically these questions about trust, about consumer-facing interaction, and the dumb pipes, and taking Tink as a case example. And I think we shouldn't focus too much of Tink, but see us as a proxy of maybe what's to come elsewhere. So Tink launched back in 2013 in Sweden. We reversed engineered the non-public APIs of the bank and allow you to aggregate data from virtually all financial institutions in Sweden. And here comes the trust question. So for the first 6 months, the only articles we had in the papers were about you shouldn't trust them, they're not secure enough, and basically every single bank says it's illegal to use Tink, and it will have severe consequences if you continue. And then we had our first 100,000 users, and things started to change. I don't think that trust is something that you should give to anyone. The same, when Tink is the inception of Tink, we didn't deserve any trust. And you can't go out to the public and say, well, give us trust. You just need to, whenever they give you some trust, you just need to be sure that you're professional every single day. Today, with 500,000 users, and to be Tink being a household brand in Sweden, trust or security would be an absolute non-issue compared versus banks. Obviously, I think that we need to deserve that trust every day, and so does banks, but I don't think that the consumers makes much of a difference. The second thing we did a year later after we launched was that we also started doing payment initiation. So we initiated payments through the same APIs, basically let anyone do transfer bill payments inside Tink, but executed by a regular bank. So you were actually allowed to cord cut your bank. And people increasingly have done so over the past 2 years. And I think there are a few distinct reasons why. One is how we enrich the data, how we empower the consumer to be in the front seat of their finances, that we do it multi-bank, and that we do it with a very nice, intuitive UI. So I would say on the question, will there be competition when you now can take your bank and deploy it in another service and bank elsewhere, no matter where the account is held? Yes, I think it's going to be definitely up for competition. I'm not saying that people won't stay with the banks. I think that you have equally good opportunities of building these services, building aggregation, and building payment initiation from other financial institutions. Last year, we took maybe the biggest step that we've done. We went from only providing read-only advice for the user base to make those advice actionable. So instead of just saying, well, we see you have 10,000 euros on a 0% interest account, we say, open a new, better account. You have 1%. Do the KYC and onboarding in real time inside Tink. It's instantly there with a partnering bank. And you can also then, from within the Tink app, transfer money from 0% to 1%. We do the same with mortgages. We collect all the data, the property value, exact term structure, loan sizes, credit score you, and provide that to 2 partnering banks so they can come back with an exact price. This is how much you would pay with us, and we remortgage inside Tink. Tink also then being FSA regulated these days. And I think that if you would have asked banks 3, 4, 5 years ago, they would never ever have accepted the situation to be price compared or to be, well, considered dumb pipes. And sometime during these years, 500,000 users. Today we have they have on aggregate 25 billion euros with mortgages, with a majority of those mortgages being wrongly priced because it's been negotiated with a bank in a local branch office. The opportunity when I go to banks, the best that I want to work with, and say, I want you to provide better offers to my customers. It's a fantastic opportunity for them. It's not that they feel any chance that they're dumb pipes. They're making extremely rational decision because they know that the switching market is not there in Sweden. This technology is the only way to unlock this market, and the customer acquisition cost is a fraction of the TV ads that they would have spent. And they know that whether they lose customers from other providers, this is the key to benefit from PSD2 and open banking. So yes, banks have become dumb pipes, but I'm quite sure that I don't believe them to be dumb pipes. I don't think they're dumb pipes. And I think, looking at how this market will change, I think there will be a fantastic niche market. We're saying, I want to be the pipes, providing mortgages, current account, credit cards, to the likes of Tink, or Amazon, or Facebook. Obviously, margins will be lower, but volumes will be extremely high. So, what do we think that, when I have answered these questions, well, people will trust new services if they deserve it. They will interact with these services and cord cut the banks if those services can provide something better or more efficient. And thirdly, banks will, to some extent, some of them, be able to provide products into these new services, acting as pipes. How do we think this will redefine this market? I think firstly, we go to a market where new technology and legislation will bring transparency. It will move tons of power from consumers the other way around, obviously, from banks to consumers. I think that consumers will pick and choose their banks rather than inherit it. And I think it's the mega winners of this is not going to be the fintechs, but it's going to be the fantastic banks, the banks who provide good services at good prices that haven't got the number of users that they deserve over the past 10, 20, 30 years. Because the only way to get new customers is basically to sit and wait for your current customers to mate and hope that their new kids 18 years from now will pick the same bank. And I mean, that must have been a dreadful situation. And I think it's going to be the most rewarding situation to be a banker in our lifetime. when this European consumer market is going to be reshuffled. Obviously, being the first one out, saying, I want that user, they are wrongly priced, they have the wrong products currently, is going to be an enormous opportunity. I think, as I said in the beginning, we're going to see the good share of banks and the apple of banks going to be lifestyle products, picked and loved by users, pay 10 times more. You're going to have the cheap Charlies of banks, and you're going to have everything in between. I think, as I said, it's going to be the most exciting time. I think it's going to be rewarding for those who deserve, and the one who fall behind, obviously, is going to have a tough time. If you have a question about our technology, how we can do this in Germany or elsewhere, please find me outside. But thank you very much for having me today.
Other questions? Yes, there's a question.
Thank you. Very nice presentation. Really captured my attention. Question I have is, obviously you went through the journey, you said today you have all the banks connected, but there was a time where you probably started with 1, 2, 3, etc. So I wonder from customer perspective, how important was for them to have a view, full suite of banks available rather than just a few at the beginning, and how you went around that, convince them to start using your product even though there wasn't a full suite. And the second, related to this, is, I can understand this is a very nice value proposition for the banks that, as you said, struggle, don't have enough of customers, etc. But how about leading banks? Those that really, today are leading in the market, they have big market share, and they don't want really to prompt their customers to even start thinking to leave their bank.
So first, when we launched in Sweden, I think we had 15 banks, which would represent maybe 95% of the market. And today I think we're at 50 or something. So adding every single credit card, etc. Most customers add 1 or 2 banks. I think that the majority of the value is actually what we do with the data, rather than to have the holistic picture. But obviously those combined is valuable. Second question was, yes, about the incumbent banks. So the banks that, the savings accounts partnering banks, they would be like newcomers and the challengers, whereas the mortgage banks are both market-leading banks. I mean, they are number 3 and number 5 in terms of size in Sweden. And I think the reason why they do it is because this doesn't affect their downside with open banking. They'll lose customer whether they want it or not with open banking if their competitors do stuff like the challenger banks or other incumbents. This technology is only channeling customers that want to come to them, and it's kind of unlocking. So basically, I know what their most overpaying customers with their competitors are paying, exactly. And I can just cherry pick them for them and say, these are the segment where you have extremely competitive offers. And there's no way for you to find these customers in an efficient way. Do you want to do it? Do you want to send, individual targeted offers? So it's not really cannibalizing in any way their existing customer base or position in the market.